Alright, so we're doing LeMaitre Vascular. I'm Right there.
I'm Joel Ballou,
Joel came up with a good slogan, LeMaitre money.
and we were pitching a buy.
So our investment thesis, we're looking to diversify our healthcare holdings by looking outside pharmaceuticals and biotechnology industries. Right now in our portfolio, a pretty large market cap size companies with 44, 48, 134, and 118 billion-dollar companies. So we're looking for a smaller company that we see as a growth company, so we can expose our portfolio to a little more growth. So essentially, what does LeMaitre do? They develop, manufacture, and market vascular devices to address the needs of vascular surgeons. So they estimate that their annual worldwide market that their core product lines have is roughly $900 million.
So where are they located? They're pretty well diversified all throughout the world. They receive 60% of their sales from the Americas, 34% from Europe and Middle East Africa, and 6% from the Asia Pacific rim. No single customer contributes more than 2% of net sales. They currently have contracts with 4,500 hospitals, and they make about $22,000 per sale from each one of those hospitals.
So our valuation, they're currently trading around $30. They have absolutely no debt, so we had free cash flow to equity at 0. And then we're looking at historical averages and trying to make predictions for them in the future, but they're kind of changing what they're doing as a company, so that was hard for us to make those predictions. And we weren't really getting any prices that we were happy with, so we looked at relative valuation. So the comps we use all roughly do like manufacture medical things, some are different. So like CRH, that they're more like stomach products, stuff like that, so not quite vascular surgeon. They're all fairly big market caps as well, so we rated that about 80% and came up to a total price of $34.64. So right now only about $5 higher than what they currently are trading. So the three main points we're going to talk about why we think you should invest in LeMaitre is their focused call point with their vascular surgeons, a niche market, and their growth strategy and how they've kind of changed their growth strategy.
So they have a focus on vascular surgical equipment. So they provide tools for the surgery, tubes to redirect the blood flow during the surgery, clamps, tapes, injectors, surgical glue, a variety of different catheters, which are now latex-free. And there's two different kinds of vascular surgery, and they provide products for both kinds. 78% of the sales to the hospitals were for vascular surgeons. So that's the niche market that they're focusing on, is vascular surgery.
There's also 15,000 vascular surgeons they had, and just over 50% of them are currently using their products. So they're looking to grow that to eventually have all vascular surgeons.
Give us some examples of a vascular surgery.
So vascular surgery has to do with blood flow. So let's say that if there's a blood clot and they want to remove it, that would be vascular surgery.
Okay. And is the prevalence of vascular surgery increasing?
It is.
Okay. Do you have stats on that?
I don't have stats, but it is becoming more popular.
Okay. Back up that assertion with some stats. Okay.
So then looking at the niche market, so they've acquired a lot of companies, and 21 companies in the last 21 years. So they acquire small companies in low competitive areas. They want to create products that maybe large companies will overlook in a surgery, like they just acquired a company that is surgical glue, something that companies may overlook, so they can go into those markets, take up those smaller markets, which in turn maybe they can own those markets and sell their products for a higher price. So then looking at their markets, the green products here, they're either number 1 or number 2 market share. So out of 12 of their 15 vascular product lines. So they're very diverse in their products that they have when it comes to this portion. And it's good because say something like a tube or something, maybe they have competition in that area and they could lose a little of that market share. They still have 11 other products that own that market share for that particular surgery. So that's something that's positive for their product diversifying.
So for distribution, when they first enter into a market, they want to sell their products to major distributors who then sell it to sub-distributors who then sell it to the hospitals. And this requires them to sell their products at a lower price. and they have lower profit margins. So then, once they've established their presence in an area selling to the hospitals through these major distributors and sub, they move to sell directly to the sub-distributors. And now what they're doing is they're having sales reps that are going out and meeting with the hospitals so that they can sell directly to the hospitals. So this allows them to sell things for higher prices and have higher profit margins. So 93% of their sales are now direct to hospitals. And in 2018, they terminated their sub-distributive agreements in Europe and Asia, and they're all selling direct to hospitals now. And their termination fees for these contracts are pretty low, about $100,000. And in 2017, in China and other Asian areas, they terminated their major distributive agreements and moved to sub-distributive agreements. And they believe in 2019, they'll begin moving direct to hospital. And in 2019, they plan on capitalizing in their China, Asia, and Pacific Rim area as they're moving with relationships closer to the hospitals, increasing their sales, marketing, and regulatory expenses.
So just a couple of graphs show that they're growing their sales and operating income have been increasing since 2014, which is obviously showing that they are growing. So kind of their three areas where they want to grow. Before they were big into acquiring companies, which they acquired 21 companies in the last 21 years. They still are going to go with, if there's a company or product that they want to acquire, they're going to do that, but they're moving more into their sales force expansion. So they have 108 sales representatives. They started in 1998 with 0. They grow about 5 sales reps per year. In 2018, they grew 18. This is because they see China and that Asia area as somewhere to grow, and they went from 13 sales reps there to 31. They also have 5 products being released in both China and Korea that have been approved in both Europe, America, and Canada already. So they're expecting those to be approved in the near future, and that will double their product line in China along with their sales reps. So they really want to grow there. And then moving to the next side about their R&D. So they kind of go about R&D and products as like a win-loss record. So they use many different things to do this, but it's sales growth, return on investment, and profitability. What they see as maybe how they control what a win or a loss is. So if they're R&D, they have 11 wins and 6 losses, which is obviously a pretty good record. You want to be winning more than you're losing with current products that you are researching and developing.
And their R&D is oftentimes an improvement upon the products that they've acquired through other companies, through their acquisitions. So their CEO is actually a surgeon, and he looks at the products and sees how the surgeons want them to be improved, and then they re-release them, and they believe that they're better than the competing products in the market. So for acquisitions, they have a win-loss record of 13-5. The results of their acquisitions, you can see the bottom blue line here is their non-acquired sales, so this is like organic growth since inception. And then the dark green is their acquired sales, and then the top lines are their growth from their acquired sales. So they're very good at acquiring products and then increasing the sales amount through that. And then their return on invested capital has been increasing, and they've been outperforming their industry for quite a while now. So for March 2016, they acquired assets of CryoLife. This is just a way to redirect blood flow, one of the products that they've acquired.
They got Restore Flow in 2016. The big thing for them was they wanted this product and they wanted to get approved in Canada and European Union, so they're working towards that. And they purchased it in 2016 and had a revenue of $1 million.
Embryonic catheters. They were having problems with catheters being made out of latex, so they're developing products that are latex-free, so they acquired this company and now they're creating a latex-free catheter that has now been released into the market.
This was a big one for them because it provides them to a product of surgical glue. That's something they never had before, and they're kind of been developing in that area, and then this acquisition led them to acquire that.
And a lot of these, like the surgical glue, are complementary products to what they're already selling to the hospitals. So once they establish a relationship with them, they're beginning to sell them more and more products. So product development and new technology, improvements and expansion after acquisitions, a record of 11-6. These are a couple more of the products that they acquired and have improved and released into the market. Like for patches, they're releasing different sizes. They're improving the tubes that the blood goes through, making them smaller, more useful for surgeons, things like that. And for their competition, so their market here is about $5 billion, and they have control of about $900,000 of it. That's the vascular surgeon market. None of their competitors have larger market share than them. They're all less than 900 million. So they believe that it's slightly fragmented and that they should be able to take up more of the market share.
So just a couple of risks that they have as a company. They're a global company, so a bunch of rules, regulations that they'll have when dealing with European Union, China, Canada, US, it's all different. Exchange rates, patents. We were looking at their patents on their 10K, and it just said that they review their patents upon expiring. They have some expiring in 2023 is the earliest, and they're going to review those and see whether they want to extend it or not, if it's a product that's enhancing the company or taking away from it. Keeping up with technology and market, and struggling when they acquire a new product or company. These last two they've done a very good job at doing. As you can see, how they're growing sales when they acquire a new company or a product. So it's something that they're doing to basically lower the risk of those two things. A couple highlights that they got released with their quarterly. They basically outperformed what estimates were in almost everything: sales, net income. They do pay dividends, and the board of directors approved a 21% increase. Their dividend is not very high at all. It was 7 cents last year, so not a very high dividend. And then they gave a thumbs up to repurchasing 10 million shares of common stock, which has, they just gave a thumbs up to that about a couple months ago, so it hasn't been started yet. And then yearly, revenue, net income, and EPS, they also beat earnings or estimates for all of those two, which shows that they're beating what everyone says about them.
So for the past year, they've been underperforming their industry. We believe that this is a valuation adjustment. In 2018, they were selling their general surgical equipment. So they decided they wanted to focus on the niche market and focus on vascular surgery. So when they did that, they didn't meet earnings estimates, and their stock value dropped. Lost $3.3 million in revenue annually. We believe this was a valuation adjustment, so now we think that they are accurately valued and that they're poised to grow in the future because they're focusing on organic growth. They're not going to be as focused on acquisitions. They now have a foot in several different markets, but they haven't been pushing their sales. So as we were talking about earlier, in China, the Pacific Rim, they're going to be deploying more and more sales reps to more and more hospitals so that they can sell the products that they already have. And then that's the end.
Do you have a breakdown of their revenue by region?
Yes. That was net sales by region. So this is by year 2015, 16, 17, 18, and then international, they weren't breaking up by Middle East and Africa and Pacific Rim until 2017.
Okay.
And then that's the Americas, and that's the total.
Okay, so still heavily weighted towards the Americas.
Yes.
Mm-hmm. I think it was 60%.
The only other thing I wanted to see, I mentioned just some growth stats on vascular surgery, but you had stock performance versus the healthcare spider, but it might be more informative to look at, just pick a couple of their peers that are also medical device manufacturers, since pharma and devices don't exactly move in lockstep all the time. So it might be interesting to look at that against just like a handful of the peers you picked instead.
Okay. Yeah, we can do that.
You have questions from the class, comments, questions, concerns?
Yeah.
Do you know what percentage of their revenue comes from supplies versus like equipment or like kind of reusable supplies?
They don't have reusable supplies.
Well, no, like resellable. Like if they made tongue depressors, they'd have to keep selling them tongue depressors every month or something. But consumable, yeah.
Goods,
like
as opposed
which
to durable goods.
Yeah, like opposed to like longer term equipment that'll last a company. You know, you sell it once, it's 10 years.
I don't think they sell long-term equipment.
It's more, just like if
Single
you
use.
Okay, so most of it is single use, so
Yeah,
the company's
constantly
kind of
supplying.
more or less forced into keep buying from them.
Yeah.
And then what are some of like the more common vascular surgeries that are actually like performed? I mean, that's kind of a broad question, but out of like, I mean, there's probably plenty of things that need vascular surgery that need vascular surgery supplies, but what are the more common surgeries that are needed, and what types of patients are they kind of like going into? So when I think of vascular surgery, I think of like older people, because they might have blood flow problems, and right now, you know, older people, or there's getting a lot more older people that may need this kind of.
We had it in our screener, but we didn't put it in our presentation. But yeah, the trend for the number of vascular surgeries per year was going up.
Okay, and do you
we
think
can
that's
get
just
those.
because of the aging population, they kind of need it, or?
Yeah, that would be why. And because they're becoming more and more available to be done in different countries.
Okay.
There's also two types of vascular surgeries that we talked about, an open and another one. Open was more common for a long time, but now they're switching more to the other side, so they're putting more products in that way too.
Yeah, they're focusing on being able to develop product to meet those needs so that they're less invasive surgeries. That's what a lot of their R&D is focusing on.
Yeah, so I think to Peter's point, if you could maybe contextualize vascular surgery for us, that would be helpful. So just like the growth statistics, some examples of like vascular surgeries and what kind of patients get them, et
Yeah.
cetera. Help people understand.
Cool.
Yeah.
Yeah.
Thanks, guys. Oh, wait, sorry.
So are they doing anything with the robot surgeries that do, it's more the endoscopic like you were talking about, they go inside? Do they make supplies for that, or are they looking to make those machines at all?
No, they're not big enough to start making machines. No, they're not.
Turn that back on, there was one of your slides, it was the niche market slide, I think it was. Wire.
The first or the second one? One's at the top.
First one, I think? Yeah, no, the one with the pie charts. Yes. Why are they not in those other two sectors? They look like they're probably about a quarter of everything all told, 20%, something like that? Why are
They
not?
are in those sectors, but they have number 2 in market share, not number 1 in
Okay.
market share.
I thought
Sorry.
Grim was number one.
You brought up one more thought, sorry, I'm totally speaking over you, Charles.
No, go ahead.
In your company description, one of the, in addition to like medical devices, it says human tissue cryopreservation services. So I'm guessing those are the graft type things. Maybe well, if you can do it off the top of your head right now, talk to me about what that actually means in kind of layman's terms. I feel like maybe that's another thing to follow up on, to describe what human tissue cryopreservation services are used for.
Yeah,
Okay.
Yeah,
we
we'll
can
make
do
that
that. I mean, I can try if you want me to, but rather not.
Just follow up on that.
Okay. I see it's an actual.
So given that we just bought Addus or Adis, and essentially their business model is for senior citizens, do you think that if we bought this company, assuming that with the trend of seniors being in kind of growth because they're going to sell more supplies for it, do you think that we'd be heavily or weighting our portfolio too much kind of on this trend of senior citizens? Getting older
I
and-
think that this is, like, older people can use this, but I guess we'll have to look at more stats and actually see.
I don't
where
think that
the
would be a
ages are.
bad thing. I think we'd be preemptively preparing for it. I think it would be a great thing if we did that.
So I think
Just
we
a
have
thought.
to look at maybe the stats on vascular surgeries and what conditions they treat. In general, the older you are, the more medical services you consume, period. So I'm sure there's some correlation with older people having more vascular surgery just because older people use more healthcare, period.
Just a thought.
That being said,
Heavily
maybe
weighted
to
on
put
old people.
Peter's mind at ease, we look at overall demographic trends, like, this one would actually be pretty easy for you guys to pull, just like, what's the, like, because right now you have the baby boomer generation that's like hitting like retirement age, and I think you might end up actually seeing kind of a leveling off because the boomers were kind of a fairly large generation, so maybe you look up, like pull some World Bank statistics on the demographics of the US. There we go.
So looking at your sales and R&D, that doesn't seem, on the bar graph slide, like that. It showed that their organic, like the sales that they generate without acquiring a company weren't really going up that much. It looked fairly small. It was definitely the smallest bar, and it also didn't seem to grow as much as the other bars. But if they're gonna focus more on that, are they also gonna keep buying companies in the interim, or are they gonna spend all their
Yeah,
resources?
so I was reading through an interview that the CEO had, and they're only going to be acquiring companies that offer complementary products for the foreseeable future.
Okay.
That's what
They're
he
gonna
was saying,
focus
but
more on their sales and growing organic.
their acquired products, they are considering that like organic growth from now on.
Okay. Have they had any recalls? There was one of your slides mentioned that they took market share because one of their competitors had it.
No, I just said if they
If
did
that
that, it would be good since they have so many, like they're very diversified in their products. So
Okay.
if that happened, it wouldn't affect them as much as if they just had 3 products instead of they have 15.
Okay. And then you guys mentioned China a few times, but there's no mention of India. And I think at least when he was in the corporate strategy class, there was a little blurb about an Indian doctor who's cranking out heart
Yep.
surgeries, just
Yeah.
going
They
like
have
a madman out there.
there's-
Are they going to go to India at all?
No, I didn't see anything
We
about
didn't see
them moving
anything
to
about
India.
India or indications that they want to go to India.
Okay.
Don't worry, one last thing. Well, first, on the front page, it says your market cap is 597 MB. I assume that's supposed to be million?
Oh, that's probably a typo.
Mega billion.
I'm
Yeah,
sorry.
and then on the actual, yeah.
Mega billion.
And then on the stock performance, you can see between kind of late 2017 and late 2018, it essentially kind of climbs, and then there's 3 really big like down ticks, I guess. Why exactly did that occur?
Yeah, it was missed earnings.
Like 3 missed earnings in a row?
I don't think it was 3 in a row, no.
No, you guys said that they missed it once and then met it, and then it dropped.
Yeah, we had that on
Oh, okay.
the
Right.
screen.
Sounds good.
We can go through all the drops if you want our follow-up, but.
Yeah, I mean, that should be good, yeah, for you guys, so.
Charles Peter, anyone?
No, that's
They're asking questions.